In this video, I'll be talking about the difference between public stock investing and private stock investing. In company investing, there are two markets that are available to the investor. The most well-known one is, of course, the public market, which is normally known as the stock market. But the second market, which is available normally to sophisticated investors or those people who are in the know-how and are dealing in private stocks, like myself, for example, the private stock market is also a very lucrative place to invest. So these two stock markets, what are the differences between the two stock markets? The number one difference and the most obvious difference is that the public stock market is available to the public and the private stock market is a private market. Now, before I get into that, the public stock market are all of those companies which are available for sale on public stock exchanges. So that could be on the Dow Jones, on the S&P 500, on the FTSE 100, or the FTSE 250 in the UK, or any of the other stock markets which are available. The private stock market are those stocks which are available through the private market. So they're not available on those public exchanges. So essentially, any company which is not available for sale on the public stock exchange is by default private stock. Another difference with the public stock market is that with public stocks, all of the information is available. They're regulated markets, so of course their authorities require them to disclose certain information regarding their accounts, regarding their management, regarding what's going on in that quarter or even that year, and what's their short and medium term and even their long term plans. All of that information is normally available through annual reports, which are available. You can literally go and search on the internet a particular company, for example, Coca-Cola, and you can see what their plans are for the next quarter, for the next half year, and even the next 5 years. With the private market, that information is not available at all. In fact, that's why you really need to do a lot of investigation with the private market, and your due diligence is normally higher. So there's two types of businesses in the private market. You'll say there's the smaller type of private market business, and there you do really need to investigate into every single part of the business. And then your larger private market business, which starts around the 10 million turnover plus. I mean, even then, the information is not available. However, because they're more professionally run, of course, there's not as much due diligence that may need to be done. And of course, that is, every business needs to be taken differently. For example, if you've got a private business which is dealing with, maybe boats and yachts, each boat and each yacht is, a significant sum. It could be hundreds of thousands of pounds to purchase that one yacht or that one boat, even millions of pounds to purchase that one boat, and therefore the turnover is going to be much higher. You could be in the 100 million turnover range and still it's considered a small to medium sized business. So really it depends on industry as to what information is available and how much due diligence and how much investigation you need to do to find out about that particular business. Me myself, because I'm dealing with the small to medium sized businesses, then we do need to do a lot of due diligence. However, inshallah, when we get to a certain size in our business buying journeys, then you don't need to do as much due diligence. Why? Because they're very, very big companies which you know about through your general life. And therefore you don't, okay, these businesses, if they got to a certain stage where they've become almost a household name, they're still private businesses. Do I need to do so much due diligence on them, or am I able to get some very specific information which makes me comfortable yet that this is something that I want to purchase and I want to invest into? So private markets, really, you have to investigate a little bit more because that information is not available publicly unless that bigger business, that bigger size business is freely publishing that information on their website. Generally speaking, that does not happen, but it can happen. Another key massive difference between the public market and the private market. With the public market, the price of a stock is based on auction, is based on movements in the stock market. So one day, for example, you could have a very, very high price for a business, and the very next day, because the general market is not doing well, then that price of the business becomes highly reduced. This is actually really attractive with the public markets because public markets are normally lower risk and lower return. However, when does it become attractive to buy those public stocks? It becomes very attractive to buy those public stocks when the price of those stocks come down. It normally is because the whole economy is down, and therefore, for example, the FTSE 100, the FTSE 250 is generally trading lower that day. Therefore, it might make it more interesting for you to purchase that, and more attractive for you to purchase those stocks. Me personally, anyone who's watching the channel of Sharia Finance Market, I like yield stocks. So I like stocks that pay dividends over time, and therefore that will 100% of the time determine whether I invest into that. Normally with public stocks, I look at a threshold of at least 5% before I even think of investing into that business. Of course, the higher the number is, the better it is. And when you're talking about 5%, you're talking about 5% for blue chip companies, companies which are household names, very, very well known. And therefore, normally the stock prices of those businesses are very high. So therefore, if you're able to get a return of 5% yield based on the dividends that they normally pay out, then that is actually a very good return, because normally you won't be able to get those kinds of returns with those blue chip companies. Now with the private market, of course, price is always on negotiation. So where with the public stock, you literally go into your app, or you go onto the website, or you talk to your fund manager. You say, okay, I want to buy stocks based on this price. For example, if they hit that price, you have a company in mind. With private markets, you really just need to look at that business, and it's a negotiation between the two parties. So you'll be negotiating based on what you want to invest into that business, how many stocks you want to buy, whether you want to buy 100% of that business, and you are in negotiating between the seller of those stocks and yourself. So you can get very, very good deals. For example, and the structure of deals can be fantastic. The other major benefit of, so where the major benefit of the public market is that price movement is normally not to do with the business itself. The price movement with private stocks is that you can negotiate and structure very, very attractive deals. There, we're currently working on a deal. I hope it goes through. It's very, very attractive in the structure. The price we're actually paying, the highest price that we've actually paid of any business so far, but the structure of this deal is so attractive that it's almost impossible to say no to that kind of investment. So that's the good thing with the private markets. Now, of course, we talked about low risk and low return with the public markets, because anyone can access them. And because anyone can access them, the regulated markets, the risk is lower. Those companies generally can't defraud the market, and they can't defraud their investors. However, the private markets is higher risk because that information is, it's an unregulated market, so therefore they don't need to provide that information, or even have that kind of auditing structure in their current companies, and therefore the risk is a little bit higher, but the returns can be much higher. Me, generally speaking, I don't look at anything less than a 20% return. If I'm unable to get a 20% return year on year, which means I can pay for that business 100% within 5 years on a 5 year amortization period, I don't take a second look at it. Um, if, for example, it's a bigger business which I've not got to yet, then of course, that I haven't got to that size yet, then of course that's a different story. Then you could probably say, okay, if this business pays for itself over 7 years, then it's still attractive. Of course, there's certain sizes of investors. Of course, if you are able to buy businesses which are doing £1 million in profit, £2 million in profit, £3 million in profit, those businesses, you normally pay a higher price for those, because they are bigger businesses and they have good structures of teams. They have a very, very good USP. That's the reason why they've got to their position where they're making that kind of profit, and therefore you pay a higher price for that. And of course, if you're able to pay for them in 5 years, fantastic. If you're not able to pay for them in 5 years, maybe 6, 7, 8 years, then that could also be something which is very, very attractive. In any case, when me personally, when I'm looking at buying a business, and this is the premise that we'll have within Sharia finance market, generally speaking, we may want to exit on a business. However, we want to think, okay, if we own this business up until the end of time, the end of the fund, or the end of whatever it may be, how much cash is that business going to throw off over the next 20, 30, 40, 50 years? Whether we decide to exit or not in 5 years' time or 10 years' time, that's a different story. But if we kept this business for 30 or 40 years' time, are we able to generate consistent cash from that business, and generate returns for investors, and that's going to be the key principle. So that's the differences between the public markets and the private markets. Public markets available for everyone. Private markets, it says it in the name, of course, not available for everyone. You really do need to know people. So me myself, I'm very much involved in the private market. I know about the businesses. I know what sellers are looking for. I know what to look for in a business. I know what the pitfalls are. Of course, I'm always learning as well. Life is a learning journey, and you will always learn things. But it's all about minimizing that risk and ensuring that your returns can be as high as possible. In a really easy way to go about. The other thing with the private market is that if you're not involved in the private market, where with the public market, you can just read annual reports, you can find company information, you can scroll through lists of companies and think, okay, that's something that I'm interested in. Of course, us being Muslims, when we are looking at a business, we have to make sure that it's Sharia compliant, yeah, that it meets the criteria as laid out by Sharia, meaning it's not going against any of the rules of the Sharia. And then you'll pick those stocks. With the private market, if you're not involved in that, it's almost impossible for you to get deals. Almost impossible. Alhamdulillah, I'm at the time of place now in my investing and in my business life right now, where I can literally access any deal from almost any industry, and I'm able to connect with the investors, connect with the sellers, and be able to get a deal over the line. That's the other thing. In the private market, so in the public market, you get a deal over the line literally by pressing a few buttons on the app or getting your manager to do that, your fund manager to do that. In the private markets, it's not like that, because you have to ensure that you are able to get the deal over the line. Alhamdulillah, we just completed a deal as well. I think we'll leave that for another video, but I just completed a deal and we just had to go through some the acquisition process and the integration process. Normally the integration process for us now takes about a week to 2 weeks, but for a person who's not initiated into the private markets, do they even know what the integration process is? Do they know what needs to be done after you've purchased stocks of that business? Or you're 100% owner of that business. We always go in for 100% ownership. It's just the best way to do. There is a case to have maybe 60 or 70 or even 80% ownership. 80% ownership is always more attractive than 60% ownership for me. However, there is a case for that where you want some family members to stay owners of that business, or it's the current owners, I should say, not family members, current owners of that business, to stay owners of that business, because it gives them that incentive to continue to have that that passion that they've had for the business for so many decades. And that's the other thing. I mean, we can go and talk about private markets forever, because of course I'm involved in it. So let's end it for this video, and I hope that gives you enough information to identify that there is, of course, everyone knows about the public markets, but the private markets are also there. They're very, very attractive. And of course, if you want to find out more about investing into the private markets, Sharia Finance Market will be launching our own private equity fund, in which we are going to be looking for the businesses. We will take care of all of the management. We'll take care of all of the ownership and the the purchasing of those businesses. We'll take care of all of the integration. We'll take care of everything. We'll be taking care of all of the distributions. Everything will be taken care of. All you will need to do is to see whether you're interested in investing into that opportunity, and inshallah, benefiting from the returns of that. Have all of your money paid back in the latest 5 years initially, anyway. And then who knows where we get to, or what size of business, and Allah subhanahu wa ta'ala knows best. Assalamu alaikum, and I'll see you in the next video.